Good afternoon, dear participants. Good afternoon, Alexander. I'm happy to welcome all of you on our session with Alexander. By the way, Happy New Year. So it's the first session this year. And it looks like that this year will be interesting. And of course, we don't know what to expect. But today we will, as usual, to speak about markets, to analyze current situation. And before we start, as usual, I will remind about risks. That's the most important thing in trading, investing, to understand how to control risk. And please keep in mind when you approach in any position, any trade. So every time you need to understand where your risk and analyze trade properly. For those who participate our session for very first time, I already checked in our chat that there are a lot of new participants. I will say some words about Admirals. So we are a global brokerage company. So we work in a lot of countries, and actually today we see people from Spain, from Europe, from Latin America, from Asia. So actually from all over the world where we have, let's say, our presence. So our service which we provide for our clients is trading and investing. So our clients can trade and invest. Together with this, we provide different platforms like MetaTrader and also our native mobile app and also our native trader, which was launched not so far, and also in the future it will be a launch for our audience. I also want to say that for those who participate on our session for the first time with Alexander, we have a recording of one of our previous classes where Alexander spoke about his indicators, how to use them. I will attach link to this video for those who are watching us on YouTube, and for those who are here in Zoom, I will send link after my part. I also want to invite you for our new project, which we started, let's say, this year. It's called Market Talks, where each month we invite different traders, different investors to ask questions about their path. I hope that Alexander also will join one of our sessions, let's say, in upcoming months. And of course, I will notify. So that's important to understand, because we know that people analyze markets in different ways. Let's say everyone have, let's say, different approach and different strategies. But what is really interesting to understand how the person came to be a trader. And actually, for the first one, we have Anna Cooling. So she's from United Kingdom, and actually her husband, like David Cooling. So this is a family of traders. So which is really interesting to understand how it can be a path for the family. So I will send a link. Please register, and the next session will be next week. As I said, we have, let's say, our invest offer, and one of main, let's say, advantage is as also our opportunity to provide for our clients fractional shares, where you can open only part of the position. So this tool is available for our clients who use our invest account. So there you can buy different stocks partially. And of course, I want to encourage you to subscribe to our YouTube channel, because this webinar will appear there, and also we have, let's say, different educational content which will be which can be interesting for you in terms of trading, investing. I will send the link, and also for our Telegram channel, where we keep updating about our upcoming events. So just not to miss some webinar, some event, you can subscribe and follow us there. That will notify you about our events. So for today agenda, so we have, let's say, some static part which we have, let's say, each session, like to go through the key markets overview. Also, it's already tradition to look at a new high, new low indicator, which Alexander followed, to discuss and probably to hear, let's say, some words about how it's going beginning of 2023 for Alexander. We have, let's say, some stocks to overview. One person sent, let's say, one stock with for our contest, so it's also will be interesting to analyze position which he was suggested. And in the end of our class, I will say how it's possible to install Alexander's indicators to MetaTrader 5 platform, and also rules of the contest will be also in the end of our class. And before we start, I also start to add in, let's say, some screenshots, like some overview of markets, and here are the screenshots of ETFs, like different ETFs. So we see that in some cases, say for the main one, like SPY, which follow S&P 500, or QQQ, which follow Nasdaq. So it's more or less common, just not for past months, like no big changes. Of course, there are some changes in other sectors, which you can see, which are highlighted like green, and the most volatile are the leverage one, which of course, just to remind one more time, trading, investing with leverage is quite a risky thing. And also, if you're looking for specific stocks, so we see that also we don't see, let's say, one trend. We see that Apple declined, let's say, 5%, but at the same time, Amazon raised for the same 5%. The Tesla is declining, Pfizer is declining. So the it's, let's say, some mixture, let's say, on the markets right now. And actually, the earnings season already started. So companies already started to report about their earnings. So it's also influence to the markets, of course. And yeah, and I think we can switch to our topic. So one more time, I'm happy that Alexander joined us, let's say, each month, where it's possible to get knowledge from his experience. For those, yeah, for first time, the latest book which Alexander wrote, it's the New Trading for a Living. It was a lot of book before, which I personally read, and I saw also people in chat mention that they read book previously and joined our webinar for the very first time. So yeah, that's a pleasure to have our class. Alexander, the floor is yours.
Thank you very much, Roman. Always pleasant to be, to work with you, to be a guest at your program. And you're very correct about mentioning that risk and risk control is absolutely central thing. I wish somebody told that to me when I was starting out. When I began to trade, I thought I was trading. I was gambling, really. I had no idea about risk control. I had a very tiny account. In the beginning, I think my account was $2,000, and then it became much bigger. I had a $5,000 account. I mean, total nonsense. But I would invest all money in one stock. And of course, once I earned some money in my professional career, the account got bigger. That's when I really became alert to the topic of risk management and developed this 2% rule that you should never risk more than 2% of your account equity on any given trade. So, for example, if you have a, let's say, $50,000 account, the maximum amount you can put at risk would be $1,000. 2%, and that's the maximum for one trade. You can have several trades going at the same time, and that's for a relatively small or mid-size account. If you trade a serious size account, I never come near 2%. I don't come near 1%. So risk control is absolutely central. And since we're talking about beginning traders, I want to say one more thing. The worst thing that could happen to a beginning trader, to somebody who just got into the markets, the worst thing is to make money on the first trade and on the second. That's what happened to me. And I decided that trading was easy. Hey, look, I just looked at the stock. I made money on the first stock. I made money on the second stock. This is easy. And that was a delusion, because it's the opposite of easy. It's actually very, very hard to take money out of the markets. But having the delusion as a result of my two first successful lucky trades took me a couple of years to get rid of that delusion. So if you make money on your first or second trade, be very, very careful. That's not how the world operates. In any case, that's for the introduction. And Roman, what do we do? Discuss. I have your email in front of me. It says to start with how 2023 is going so far. Suggestion for intro. You want me to turn on my computer, or how? Yeah,
yes, yeah, you can.
Probably better. So let me see. You taught me how to do it. Share screen, and then I go. Where is my trade station? And click share. And now you should be seeing my computer screen. Let me put on the weekly chart of the S&P. If you had logged in a little earlier, you may have heard how I was basically briefly talking with Roman, and I mentioned to him that back in January, a year ago, you see this little red arrow towards the left side, upper left side of the screen. This is the weekly chart of the S&P, and that little red arrow marks the end of the bull market and the beginning of the bear market. And a couple of bars later, a bar later, I think this next blue bar, that's where I was speaking at the conference, and before the conference, I've sent an article to the newspaper which organized the conference, and my headline was, be careful where you stand when the tree falls. It was absolutely clear to me the bull market has ended, we're in a bear market. So let's see what's happening. So a bear market has a classical pattern, a lower low and then a lower high, a lower low and a lower high, a lower low and a lower high, and that's where we are. And as I look at this picture, I do not see a bear market end. Now, I do think that we will very likely see the end of the bear market in 2023. It would be hugely, hugely unusual for the bear market to last more than 2 years. But I don't think the bear market is finished yet. And you can what you can see near the right edge of the screen, there was a very strong rally that began in October, and that rally basically ran out of steam at the end of November. The market is sort of holding horizontal for the last 5, 6, 7 weeks, and it's just beginning to roll over. If we look at the daily chart of the S&P, here it is in front of you, you can see how high MACD histogram was in October. And to me, the height of MACD histogram identifies the power of bulls. So here, the S&P index was at about 3,900, and this was the power of bulls. Now the S&P is a little higher. It's at 3,957 as we speak. It was 4,000 actually this morning before it began to collapse. And look how much less power bulls have now. The index underneath is something that I developed a very long time ago, and I live by this index. It's force index. To me, it's the best way to utilize volume in trading. Instead of drawing vertical volume bars, I use this indicator, which I developed and named force index. And again, you can see the strength of force index in early November, in late November, and now weaker, weaker, weaker. So ever since this rally ended sometime in November, bulls were trying and failing. And of course, you see what's happening in the market actually today as we speak. Not a pleasant day. The Dow is down 357, 358 points. And S&P is down 31 points. S&P is down 360 points. I mean, this thing is going not in a very good way for the bulls. I'm a bear. I have short positions, and certainly very happy. Let me show you one of my very favorite indicators, and that's new high, new low index. The new highs are the leaders in strength. The new lows are the leaders in weakness. You see a weekly chart on the left, and it should be, well, let me put this arrow here again. This was the end of the bull market and the beginning of the bear market. So the new highs are leaders in strength, and the new lows are leaders in weakness. If I compress this chart, you can see that during the bull market, the new high, new low index stayed reliably above the zero line. I'll make it red so you can see it better. Like this. So the red line is the zero line. So during the bull market, the new high, new low index is above the zero line most of the time. It sort of kisses it and then goes and rallies again. But the situation completely changes during a bear market. You can see that since November, December of previous year, 2020, 2021, I'm sorry, since the November, December of 21, the new high, new low index dropped below zero, and it stayed there pretty much all the time. It came up above that line several times, and look what is the message of those rallies. I'll just put my cursor here. Okay, here you can see new high, new low comes above zero, and this is the end of the rally. New high, new low comes above zero, and this is the end of the rally. New high, new low comes above zero, and this is the end of the rally. And where is new high, new low index now? Last week it came above zero. Okay, so to me, I read this message that what we saw since October was a very happy rally inside of a bear market. Bull markets are interrupted by declines, and bear markets are interrupted by rallies. And this interruption is about to end. It's ending actually, I think, today as we speak, and the bear market is returning. Now, what we haven't seen yet during this bear market is a real panic. Panic, disgust, liquidation. I hate this market. I will never buy another stock again. When we see that, we know that the weakest people are being washed out, and now the buying time is here. That time hasn't come yet. People are still fairly optimistic, actually pretty optimistic for the last several weeks. But you can see what's been happening for the last several weeks. The weekly new high, new low index actually suggests that this is how tops of corrective rallies are made. As I mentioned, I'll be speaking at this conference in a few days. A year ago, I said to them, this is it. The bull market is finished, done. Be careful where you stand when the tree falls down. Now that people understand we're in a bear market, but they hope, I actually keep seeing posts online where people saying, that's it, we're having a bull market again. Yeah, you just wait. We give it a few more weeks. Be very cautious, be very prepared, and conserve your cash, because there will be fantastic buying opportunities when the bear market really ends. We will have fantastic shopping opportunities. But to take advantage of those opportunities, you have to have two things. You have to have cash, money that you haven't burned, and you have to have psychological peace. Somebody who is sitting on bad losses and only thinking, please let me get out even. It's very difficult for that person to take advantage of the coming bull market. And the bull market will come, it always does. But you have to be prepared. You need cash and you need the peace of mind. I hope that my message is helping you to get both. Roman, I'm looking at the page you've emailed me. I think that's the introduction that you wanted me to give, and that's the new high, new low review that you asked me to give. And the next item on your menu is cross markets review, S&P, DAX, etc., etc. Mm-hmm. I think we go to your computer at that point. Yes.
Yeah, we can switch. I already opened everything.
Fantastic.
So
Fantastic.
So we spoke already about S&P, and now I open DAX.
You know, just before you go away from the S&P, oh, that's DAX. Oh, great, DAX. What a chart. Take a look. So the weekly, this is my standard chart setup. You know, good trading is simple. You don't need 10, 20 indicators. I love indicators, but I have this rule. I call it 5 bullets to a clip. An old army rifle could take 5 bullets. A trader is allowed 5 indicators. And if you're really desperate, make it 6. But 7, you have a problem. So Roman mentioned to you that a few months ago, we had a class in which I went through the indicators in detail. Take a look. I think you'll find it interesting. But just to give you a 30-second summary, 2 moving averages, the space between these moving averages, I call it the value zone. Follow Roman's link to understand why. Markets are manic depressive, and the envelope shows you the borders of mania and depression. And you can see that Mr. DAX was very depressed in August, was going to jump out of the window, but they tied him to the bed. And now Mr. DAX is manic. We have to tie him down to the bed again, so that he doesn't do something completely crazy. And this is where people buy. This is where people love buying. Let's go shopping. This manic man is so happy. Let us also be happy. Well, you know, Warren Buffett, he is not a technical analyst like me. He is a fundamental analyst and an absolutely brilliant man, very successful, and I have tremendous respect for him. You should look for his videos online. Every month he accepts a group of college students for a day and teaches them, talks to them about life and everything. In any case, I digress. So Warren Buffett says, you should be greedy when everybody is fearful, like Mr. DAX was in August, and you should be fearful when everybody is greedy, like Mr. DAX is today. Right? So take a look at MACD histogram. It shows you how high it was in October, and it's a lot less high now. So Mr. DAX is slowly but surely losing strength. We go to the right side of the chart, the daily chart, and all I see there is that Mr. DAX is manic. Everybody is happy, and you know, when somebody keeps laughing, other people start laughing also. So don't be one member of the crowd laughing together with happy Mr. DAX, because this happiness is going to change and become sadness and depression, and that's when we go shopping. That will be the bottom of the market. So be very careful. The DAX is in a dangerous place right now. Let's go to the next market.
EURUSD.
Just wild. You know, I live in the US, so my currency is US dollar. I will be going to ski in Austria in March, and I prepaid, and it's a serious size bill. I prepaid half of the bill when the euro was $1.02, and actually thought, gee, maybe I should pay the whole thing. But sort of, you know, the thought escaped me, and now the euro cost $1.09. What do I see here? I'm not a fundamental analyst. I really don't understand very well the forces that move this currency so hard. But there was a bear market. There were some bullish divergences. The bear market ended. There is a very strong and violent bull market going on. And this tremendous peak of MACD histogram shows there is a tremendous power feeding this bull market. It's not likely to end without seeing some diversions first. The weekly chart is very strong, but we can see that the euro is in the manic zone. we go to the daily chart on the right, and we see a real bearish divergence. In the middle of the chart, the peak of a MACD histogram in November, and the peak now. And there is a reaction going on right now. You can look at the last daily bar, and you will see how it opened down. It tried to rally. It actually reached a new record high today, and then it turned down. So it's headed lower. What do we do? I would be afraid to sell the euro short, because this power of the weekly chart suggests euro wants to go higher, but not today. So I see that there is a value zone on this chart delineated by two moving averages, and you can see what happens when the euro goes below the moving average. Starting near the left side of this chart, goes below, buying opportunity, rally to the upper channel, goes below, buying opportunity, rally to the upper channel, goes inside, and again. So you see, there is a trading system staring at you from this chart, looking at you from this chart. You want to think very seriously about buying inside the value zone and definitely below the value zone, and then take profits when the euro starts approaching the upper channel line. You don't have to be perfect. You don't have to get it exactly at the upper channel line. Don't be greedy. If you measure the height of this envelope from the top channel to the bottom channel line, if you can catch 30% of this distance, you are an excellent trader. 30% of the envelope gives you the top grade. Best wishes.
Thank you, Alexander. Let's look at gold.
Well, by now you have heard the song more than once. There is a bull market in gold. By the way, there was wonderful signal from a MACD histogram and even better signal from force index on the weekly chart before this move got going. Just take a look. Take a look what was happening in August. Gold was banging down, but it was not closing down. You see these naked bars going down. So they push gold down in the middle of the week, but they cannot close it there. By Friday, it's already trading higher. I call this pattern, these patterns, kangaroo tails. It sticks out from the body, but then returns to the body. So 3 kangaroo tails. Look at the force index at the bottom. Very deep, sort of papa bear, mama bear, and then a baby bear. These are the kinds of divergences I look for when I trade. You don't see them very often. You see them here. The bull market begins, and right now the gold market is completely overheated. It's wild on the weekly chart and on the daily chart. And I think this bull market will continue for a while, because the height of a MACD histogram on the weekly shows tremendous amount of power. But we look at the daily chart, and we see at the very right edge, today, actually looking today, we see this little kangaroo tail pointing up. We've seen kangaroo tails pointing down in August. Now they're pointing up. It wants to come down. And again, we look back at this chart of gold, the daily chart of gold, and you see a trading system jumping. At least it jumps into my face. I hope you see it also. Prices fall into value zone, buying opportunity. Prices hit the upper channel line, take profits, and wait, and just keep trading like this. By the way, it's much easier than holding position long term. For me, at least, it is, because whenever I hold a position, whenever I stop trying, whenever I try to hold a position for multiple months, let's say, for example, I see all these little patterns, and there is money on the table, and this money is going to evaporate. Like if you're holding a gold position now, and you look at the right edge of the chart, yeah, long positions are profitable, but this thing wants to go lower, and it wants to touch value zone again. Well, let me get out of it and get it back in the value zone. I cannot tell you how to trade, and far be it from me to give you specific trading advice. I don't know you personally. I don't know your risk tolerance. I don't know your account size. None of the above. So I cannot tell you what to do. Just impossible. But I feel I owe you my clear, honest opinion. And so what I'm doing, looking at these charts, really, I'm thinking out loud. When I am alone in my office, I do exactly the same thing, except I don't speak. It all goes inside of my head. Okay, let's take a look at the next one, Roman.
And the next one is oil.
If you want to see a kangaroo tail, that's very, very, very impressive. Yes, Roman is already moving Roman is in charge of this chart. He's in control of this chart. Roman and I have been working together now for a couple of years. This is the kangaroo tail to remember. If you want a definition of a kangaroo tail, you see there is a fairly narrow, a normal size, medium size bar on the left, a huge long kangaroo tail, and then again medium-sized bar on the right. So when you see kangaroo tail, you know that's it. The market tried it, it failed in a big way. There is also an absolutely fabulous bearish divergence on the weekly chart between the peak that accompanied this kangaroo tail and the next peak. Double peak of prices, bearish divergence of MACD histogram. The bear market begins. And everybody gets very bearish on oil. But take a look at this. Take a look at the depths of a MACD histogram in August, and take a look at depths of a MACD histogram sometime in December. And between the two bottoms is a breaking of the zero line. That is an essential condition for a divergence. No break, no divergence. So we have a bullish divergence on the weekly chart. Strategic decision on the weekly, tactical on the daily. We go to the daily chart now, and the weekly chart says this thing is bullish. So we go to the daily, and again, we look at the, yesterday was a very strong rally day. Today, at the very rightmost bar on the daily chart. Today, oil opened flat, took out December peak, and is now trading lower. It looks to me like another trip to the value zone is likely to happen. I would be afraid to sell it short. The weekly chart is so strong that I would be afraid to sell short. And so the weekly chart says we have a bullish divergence. The bear market is finished. Let's go shopping. I look at the daily chart and I say, it's overvalued, false upside breakout. Let me wait until it comes below the value zone. So oil is now on this chart about $86 a barrel. And I would say that value is somewhere around 82, 83. So let's wait. Let's wait.
Thank you, Alexander. And the last one, let's look how it's going this year for Bitcoin.
Well, Bitcoin had a good week. It's I said this thing before, and it's certainly not a popular opinion. I think that Bitcoin and crypto, this is like king's new clothes, like in that old German fairy tale. Actually, the first time you asked me to look at crypto, I'm looking at the weekly chart. If you compress it a little bit, that double top was in place. That double top was in place, and crypto was like 68,000 or something. So from 68,000 it went to 15. We can call it a bear market, I say. What also strikes me with this thing, and by the way, towards the end of the weekly chart, there is a bullish divergence. You can see how deep bottom in May of last year, MACD histogram comes above zero, and then prices fall to a new low, but they cannot push a MACD histogram even below zero. I call it missing right shoulder diversions, and a rally. Rally popped above the value zone and appears to be stalling. You know, another thing about this whole crypto business is that the amount of crookedness and dishonesty is just amazing, amazing. Now there is crookedness and dishonesty in any, in any financial. Anytime there is money on the table, there is going to be some thief who tries to get. So it could happen to a brokerage sometimes. It could happen to a bank, but those are very rare and generally small items. There is no like a big thing. You know, some dishonest person manages to steal maybe a few thousand, maybe a few $1 million. But what's happening and then the agencies that look against that, you know, Securities and Exchange Commission, Commodity Futures Trading Commission, there's very well established control system to make sure that everybody acts properly, that there is no dishonesty. So dishonesty is very unusual, really, in the financial markets. It's amazing. People do millions of dollars of business on a handshake. Lovely. The amount of dishonesty in crypto is just astronomical. I don't even have to name examples to you. They're on the front pages of every newspaper, and people still believe in that. People believe in magic. In any case, I shut up. I should not be bad-mouthing crypto, but on the weekly chart, strong rally, rallied above the value zone, sort of paused there, hitting serious resistance. On the daily chart, it's manic. So yeah, I should not be bad-mouthing crypto. Maybe it's because I'm old. Maybe if I was 30 years old, I would be buying crypto, but not today.
Anyway, we see that yeah, it's, let's say, some new instrument which appeared, and probably people got sometimes crazy about this. But from other side, we have, let's say, stocks which are more than 100 years already exist, and let's say can be considered as let's say predictable instrument at least.
Yeah. Yeah.
Thank you, Alexander, for this market review, and actually we can speak about those stocks which I sent to you, and actually one person sent this to our contest, let's say, for where it's possible to win the book with your signature, but he sent it yesterday, so it's probably connected with Boeing company, so I didn't edit let's say the price, so it was I just do it like this. So it's so the entry price, let's say, for a short position, like for a sell, it's somewhere, let's say, this week, and let's say on a daily chart, I think it's on Monday, so somewhere here.
Monday market was closed. There was no Monday this week.
Yeah, sorry, yes.
So on Tuesday and Wednesday we have only 2 days.
Tuesday. So yeah, just to think, like, person suggested, let's say, this position. So what you see, let's say, on the chart.
Yeah. Well, here comes the personal disclosure. I didn't know that someone was trading it in in your contest, but I shorted BA yesterday, and this morning I took profit in it. I took profit too soon because I just didn't. I have lots of positions, 5 or 6 positions, and it just. It wasn't moving in my favor fast enough, so I grabbed about 20% of the profit that I was planning to get. But to get that profit, I would have to hold it for a long time. So I got a quick, got some quick money out of it. But I covered today. I would have been better off if I didn't cover. But I'm still looking for a broker who will accept my orders after the fact. Like I placed an order yesterday, but. To me, the trade made sense. You can see how on the weekly chart, Boeing is in the manic zone, right? The patient is having a manic attack. We'll look at the daily chart. and there is certainly a bearish pattern, how strong Boeing was in October, and on the daily chart, and how amazing the histogram is now, it's much lower. And also last week on Friday, Boeing, it's really interesting. In the beginning of last week, Boeing actually went above the envelope. And then on Friday, that's the final tallest bar, it tried to reach the envelope, but it couldn't. And I saw that as a weakness. It was manic, but a little less manic than before. And so first thing I did on Tuesday, I shorted Boeing, and then I was scratching my head, which is how I lost most of my hair in previous years. And this morning I said, you know what? A little too strong. Let me get out. And I had, as I said, I had a profit target. I was going to take profits in the value zone. I got about, so basically I was shooting for $5,000. I took a little more than 1,000 and went home. And put on another trade after that.
Thank you. If you don't mind, actually, I found, let's say, 2 stocks which I didn't send you. It was, let's say, I found it, let's say, just for just a couple of minutes before the webinar. The first one is Mosaic, let's say, company. It looks interesting, let's say, on a weekly, and yeah, just I'm every time, just for participants, I also trying to find, let's say, some stocks, some we collect from our participants, and some I'm trying to find myself in terms of let's say, some rally or declining, so where it's on a lower, let's say, for a couple of months or maybe years, and that's stock also attract my attention.
Let me begin as a look at the stock. Let me just take a look for a second. I'm going to this website that I know you and I always watch, and that's Finviz. It's an agricultural company. It traded at $80 last year. It's now trading at 45, so it lost about 50% of its value. It had earnings so earnings are not until February now, so it's okay. Short interest is low. Couple of things. On the weekly chart. And also just to say this, I'm a swing trader. I mean, for me, the kind of the normal length for a trade is a week. And sometimes I'll go to 2 weeks, but not very often. And sometimes I'll do it very quickly, like that Boeing I did just overnight. So looking at the weekly chart, it's in a bear trend. Right? We can see the value zone is declining. Both moving averages are falling. We can see that price kind of 3 bars ago, 1 to 3 bars ago, price poked its head down to the bottom, false downside breakout, and it had a nice rally, and the rally ended this week. You can see how the stock pulled into value zone, and it's now fell out of the value zone on the weekly chart. Not a good picture. We go to the daily chart. The stock made a new high this week. Hurrah! But it's already trading below previous week's top, right? The top of the previous week, you can see. It's a little higher. I would just put it. I would put this line, across this top. So it looks like a false upside breakout. And when I look at the force index at the bottom, there's a bearish divergence. So if you said to me, Alex, you have to trade this stock, I would go and sell it short now. It's still pretty high, so there is still some profit to be taken. Waiting to sell short until the thing trades below value is kind of a little late already. You want to sell short when it's overvalued. It is overvalued. I'm actually, where's my pen? I'm writing it down so that when our class is over, I'll take a look at the stock. Maybe I will short it, but I will have to work it up very seriously, not just looking at it. But a lot of that is counting money, the entry, the target, the stop, risk, and then I compare it with other stocks that look attractive, where I get the best ratio of risk versus of reward to risk. But this is definitely a very good idea. Thank you.
Thank you, Alexander. I like when you write it down. Let's say when you pronounce it. That's something which I offer to discuss. That nice.
Thanks.
And actually another position why I added it here, because for that stock I hold it, let's say, for 2.5 years, like 2.5 years, and it was closed like Caterpillar, like for let's say just last week. And I looked, let's say, with your indicators as well, so I see that it's, let's say, a little bit higher than the top, which was, let's say, in 2021. And yeah, also just
look, 2.5 years, it's a completely different universe from what I do, right? So I hate to be a bad guy who talks you out of a position which you hold, based on a long-term opinion, because my opinion is very short. It looks strong, and actually, if on the weekly chart, even on the weekly chart, if you look at the force index, you can see it makes multiple taps, and each little tap is higher than the previous one. So it looks like money is still coming into Caterpillar. On the daily chart, it had a nice rally this month. Yesterday it topped out like so many stocks. It's having a pullback today. If somebody said to me, Alex, you must trade this stock, you must put on a trade, I would say, well, the value zone is around $244. I would put a buy order at 245. It's not the pattern that hugely appeals to me, but look, we all have patterns that appeal to us. I sometimes say, if everybody liked blondes, then brunettes wouldn't be taken, right? Some people like some men like blonde women, some people like brunettes. Different tastes, different, and it's deeply seated. Why? Same thing with trading. I have certain patterns which just gonna, I get excited about it. Other patterns leave me cold. Yeah, looks nice. Yeah, nice looking woman. So this is not my type of trading. But then also you're not suggesting this even as a short-term trade. You're saying this is a long-term trade. Caterpillar is a very important company. It's really one of the central companies in American economy and to an extent in the world economy. If you want to build roads, if you want to do heavy-duty farm work, you need a Caterpillar, a cat. They call it. You need a cat. And by the way, what's going to happen soon in the U.S., it looks like both political parties, Republicans and Democrats, agree that we really have to do something about our roads. Roads and bridges in America have been neglected in many places. And there is an agreement between political powers that this has to be fixed. How they're going to fix it? They're going to buy a lot of Caterpillar equipment. Let's move on.
Thank you, Alexander. Actually, I sent you a couple of stocks related to airlines.
Yeah, you want me to pull them up on my computer? I have them in my database.
I cannot.
Oh, you do it. Okay, sure.
Yes,
let's go. Yeah. You sent American AAL, UAL. Yeah.
Yes.
UAL had earnings yesterday. And you know, they say, buy the rumor, sell the news. And the rumor was that the earnings are going to be very good because people are engaging, people worldwide, even in China, are engaging in what is called, sort of in a somewhat joking way, revenge travel. People have been stuck with the pandemic for 2 years, and finally now we can travel. And so everybody runs to the airport, buys a ticket, and just goes somewhere, just to catch up on this travel thing. So airlines are doing very well. Earnings were declared, I think, yesterday. Yeah, sure, yesterday, on Tuesday, and nothing happened. Nothing happened. Because the big run-up from the depressed zone to the manic zone to the above manic zone already happened because smart people anticipated that the earnings are going to be good. What happens today? The guys who don't watch the markets but who read newspapers when they come home from work, they've read about UAL having wonderful earnings, and lots of buy orders came in overnight. So you see how UAL opened on a gap up. And that's where it's trading now, right? So latecomers bought late, and people who knew what they were doing bought early, and they're selling to latecomers. So in the short run, this was a very attractive short. But taking a longer term view, we can see on the weekly chart this tremendous new peak of a MACD histogram. It's really, people are flying and buying tickets, and the trend has turned up on the weekly chart, and the daily is crazy overbought above the envelopes. We've heard it before. Let's wait for a pullback into the value zone.
Thank you, Alexander. I think it quite similar with
American.
It's
American Airlines. Yeah, they haven't had earnings yet, but yeah, very similar picture. Look at the force index on the weekly chart, getting stronger and stronger and stronger. So this looks good. On the daily chart, you know, somebody who looked at UAL and is buying American Airlines today, well, good luck to you. Good luck to you. The stock is approaching manic zone. Certainly not the best place to go shopping. The places to go shopping is the value zone, and you can see a couple of them right here in December and even early January. Buy value, sell mania.
And actually, I just realized that the next stock which I want to add is Pfizer. And now I'm thinking about COVID times, like it was, let's say, 2 years declining, let's say for airlines, and let's say pharma companies growing, and now it's opposite.
Yeah. You know, the stock is falling. And of course, I love trading reversals. So I'm looking at a stock that's falling like that, and my hands are itching to go and buy it. But there is a very intelligent, very successful man who was a very famous money manager in America. He is now retired, happens to be a very religious man, Catholic, so he dedicates his money and his time to Catholic charities. His name is Peter Lynch. He lives near Boston, and he wrote a book which I highly recommend reading. It's called One Up on Wall Street. One Up on Wall Street by Peter Lynch. One up, for those who are not fluent with English, meaning that one against, yeah, one up on Wall Street. And so this guy, Peter Lynch, who, by the way, grew up in a family that had no money. And in any case, read the book. He says that several important things. And one of them, one of several which stayed with me is this. Trying to catch a bottom is like trying to catch a falling knife. You invariably grab it in the wrong spot. So if you try to say, oh, this is the bottom, I'm going to buy it here. Imagine knife is falling, you go to grab it and you grab the blade, not the handle, but the blade. So this is what I see here in Pfizer. This is a falling knife, right? This is a falling knife. And eventually it's going to hit the floor, vibrate, and it will become a very attractive buy because Pfizer has a major amount of business besides COVID, besides vaccine. It's a very serious company with a very strong list of medications that they sell. So this is a falling knife, and this is the kind of chart that I would print, put on my bulletin board, and once a week it would remind me, take a look, has the knife finally hit the ground? Has it begun to vibrate? That's when I'm going to start looking to buy it.
Thank you, Alexander. And I think the last one is connected to gold, Newmont mining.
Yeah. The thing about gold stocks, I'm no great expert on gold, but having said that, I want to say that usually stocks move ahead of the metal. Stocks tend to anticipate the metal. You can compare the bottom on the weekly chart. You can compare when you have time the bottom in gold in September and the bottom in gold and the bottom in the stock. The stock is rising. It's clearly in an uptrend. Excuse me. But on the daily chart, gold that we saw just a few minutes ago is up there in the stratosphere, and Newmont mining is already declining. Declined yesterday, declining today, which is fine. So it confirms what I said a few minutes ago. Gold is in a bull market. Wait for it to hit the value zone before buying. And the same goes for Newmont. Newmont is in a bull market. Gold is in a bull market. Newmont is in a bull market. But at the right edge of the chart, the daily chart of Newmont is a falling knife. Don't rush. Let it stop. Let it get into the value zone and stop. And that's when we start looking at buying opportunity.
Thank you, Alexander. I think we covered all stocks, all instruments. I just looked through the questions, and some of them connected to your indicators, which I answer, let's say, after. But I have, let's say, some questions, let's say, from a person who asked for advice for someone who has lost all the capital by overloading and want to back to start trading.
First of all, I feel for you. Been there myself. When I was starting out, I lost capital more than once, but it was ridiculously small capital, of course. I don't know how big or how small you is. Of course, the bigger the capital, the greater the pain. My suggestion is, I have a method which I call the friendly handcuff method. First of all, somebody who lost capital and feels hurt needs to take a break. Right? You don't jump right in. You need to take a break. How long a break depends on the person. For some people, it's a few months. For some people, it's a few weeks. Take a break. Evaluate your system. And then start trading at a tiny, little, nothing size. Very tiny size. Maybe risking $100 per trade. So you cannot make any meaningful profits from that either. But you have to establish profit goals. And when you start hitting those profit goals, you can start increasing the amount of capital release. And eventually you get to the full size.
Thank you, Alexander. Yeah, so for those questions which are connected to indicators, so I will go through to explain about indicators for platform. I think we discussed everything. So thank you for your time. Thank you. It's great to start new year with you as usual, like a good tradition, I would say.
Thank you very much, Roman. Very pleasant here too. And I think this this is very likely to be a year in which the bear market will end. I don't think it ended yet, but I think that's the year of the bear market end. And as I said before, let's be prepared. Let's have money available, and let's keep our mind clear, so we don't panic the way most people do. I think we can still see a major panic attack ahead of us. Let's not be a part of it. Thank you. Best wishes.
Thank you, Alexander. So see you next time. And by the way, it was some people from conference you participated last week. So also people say hi to you. So also good wishes from Bulgaria.
Great. Thank you very much.
Thank you, Alexander.
Thanks.
See you next month.
Bye-bye.
And dear participants, as I promised, so I want to quickly say some words about Alexander's indicators and also about contests which we have, and also to cover, let's say, some parts about questions which you left in terms of, let's say, indicators. So just give me a second. I will jump back to my presentation. And yeah, basically all indicators which we show to the client, which we use during our classes, we with the permission of Alexander, can provide it for MT5 platform. So actually it's available for our Admirals clients. It's available on real accounts with a balance more than 200 euro. It can be a trade account, it can be invest account, so it's up to you. It's just available only on real accounts. And if you want to try, if you want to apply those indicators to your strategy, so you'll feel free to do so. I will send an email which you see right now, which is elderdisk@admiralmarkets.com. So you can send your request and we'll send you back indicators, chart templates, and video tutorial how to install. So then you will have, let's say, the same view as you just saw during our class. So it will be the same, and you can try to implement it to your strategy, because of course we understand that not all systems, not all strategies will work for all traders, but some elements can be applied, and it might help to identify the value zone. It can help to identify when instrument is oversold and overbought, so when you don't need to look for a buy opportunity or for a sell opportunity. So that's like the interesting part and helpful part in terms of technical analysis. So it really helps to understand where it's not a good time to buy or sell. So yeah, send your request. So I just sent the email into our chat, and for those who are watching us on the YouTube channel, it will be added in description of the video. And also another thing is related to our contest. So we have a contest each month. It's possible to win the book, The New Trading for a Living, with a personal signature from Alexander. So I'm really encourage all of you to participate in this contest, and the rules are really simple. So basically you need to be subscribed to our global YouTube channel. I will send a link right now. So if you're not subscribed and if you missed the beginning of our class, so so you can subscribe. And tomorrow, the 19th of January, so this video will appear on our YouTube channel, and then contest starts. So actually what needs to be done to participate in the contest? So you have to like the video, like with the recording, and suggest a trade for one asset that is traded as Admirals. So actually we provide, let's say, around 5,000 different instruments from different stocks, indices. So you can find, let's say, a lot of things. And I believe that we cover, let's say, the whole, pretty much all markets which have liquidity. So that's shouldn't be an issue. So in this suggestion, you add, let's say, the instrument which you want to buy or sell. You put, let's say, entry price. So I'm thinking that I will go short for this instrument like at 163. Then I expect that my take profit will be at 151, and I put my stop loss at 166. So like an expectation position, like a paper trading, right? So you just predict that the price will go from A to B. And of course, the B is take profit, and of course, we need to keep in mind about risk. So we also encourage participants to use stop loss. And basically, we have this contest period for the whole month from today class till next class, which will happen in 15th of February, so a little bit less than 1 month. But you can suggest trades, so trade can be executed, let's say, during 2 days, 3 days, or 2 weeks. So that's doesn't matter. The winner of, let's say, this contest is those whose position get the higher movement, like in percentage, just not in money, but just it was, let's say, 5% movement, 10% movement, 15% movement, and of course we start with those positions which are close to our take profit. So the average range, let's say, for positions, let's say 1 or 2 weeks. So you can find, as we actually did, let's say, during today's class, let's say something which is oversold or overbought. So just to apply those knowledge which you got right now and just try to predict. So of course we are not encourage you to replicate, let's say, this position on your real account. It's already, let's say, out of this contest. But if you want to participate, so you can do this. And the last but not least, it's prohibited to edit the comment. So if it will be, let's say, signed that it was edited, so unfortunately we'll be not able to count this suggestion, let's say, in our contest. And of course, I want to say that it's better to get all questions there as well. So we normally need to prepare in advance because we have limited amount of time, only 1 hour, and of course it's not possible to answer all questions from hundreds of participants we have on, say, on our classes. So please, if you have a question to Alexander, leave a comment on the latest video where we meet with Alexander, which will be uploaded tomorrow, and I will collect all questions and send them to Alexander in advance, and then we will be able to spend less time on preparing for questions. So the clean time of our class will be spent much more effective. So I want to encourage this, and also to remind that we will have this session market talks. I will send you link one more time, and for those who are watching us on the YouTube channel, link will be also attached in video. So actually we'll start a series of interview with different traders, investors. So the next session next week will be Anna Cooling from UK, and the next class will be with Steve Nissen. So probably if you use in your trading, let's say, candlesticks, so that's the person who brought candlestick to Europe, to US, to Europe. So we can say that he's a father of candlestick here in European part. So he brought it from Japan. So yeah, please join this session as well. It will be a series of interviews where we will try to get the personal story of each person who trade or invest, because it's also really important information for all of us, for beginners and for people who trade already for a long time and looking for their, let's say, approach. So from my side, thank you for your questions, and thank you for your activeness during our class. Next class will be, as I said, at 15th of February. So if you're already here, you don't need to register. If you watch us on the YouTube channel, also go in description of this video. There will be a link, so you can register to the webinar directly and participate already our class in Zoom 1 day before when it's appeared, let's say, on the YouTube channel. So thank you. It was a pleasure to have this evening with you. So see you next month. Thank you and goodbye.